Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look at the gold market right now. Well guys, Friday we have really dramatic action, so mostly it has the relation to our expectation on the monthly chart. Those of you who read regularly our weekly researches, you probably remember that during the recent month we have discussed the possibility of appearing the bullish stop grabber on the monthly chart, and that potentially could trigger a very significant retracement right to the 30 and 60 area. That's really big perspective with almost the $200 of the potential action per contract. So this really tremendous action could be. But right on the Friday, to get this pattern, we was needed to see the closing of the market above 1183. But right on Friday, market has dropped below this area. So within the whole month, within the whole November, market stand above this area. But right on the Friday, in the last trading session, market has plunged down and closed at 1167. This opportunity for appearing of this pattern has been erased, and this scenario right now is has been cancelled. But from the another point of view, that has given us the confidence and has confirmed that the bullish trend is still valid, and we still can stay with our long-term perspective with the 1050 area. So that we expect the reaching of the 1050, but mostly based on the volatility breakout pattern that have appeared in the last year, and it's still in progress. This is really long play pattern that could lead market to the 1050. Within the recent 2-3 weeks, we very often have seen the forecasts of the big banks, for example, the ABN AMRO, Goldman Sachs, the Societe Generale, who told about the new expectation on the gold market, and mostly they point on an area between 800 and 1000 even area. So they also expect some deep move down on the gold market within the couple of nearest years. Our target that is confirmed by clear technical patterns suggests reaching of the 1050 area. What will be after that, it's very difficult to say right now. So when we will get there, we probably, I hope we will get new clues and we could understand what to expect next. But right now, let's keep in mind this 1050 possible target in the medium-term perspective. But in short term, it's really, we have a bit closer target. So let's discuss it. First of all, beyond of erased grabber on the monthly chart, we have another bearish moments. And first of all, if you remember how market behaves here, you probably know that market just has tested the monthly pivot point of November and then dropped significantly. So it wasn't able to pass through it. That's the bearish sign. Also, as we have discussed previously, market has no background from the real purchases. No real inflow of the money in the gold market. The SPDR fund continued to report outflow from the storages. That was really significant changes in the CFTC data, but this was just the single time when it has happened. After that, this changing haven't got any confirmation, any continuation. That probably was just a single changing in the situation. That's why this retracement up stands in approximately in the same conditions in this one, when during this action market also had no support from the real purchasers on the market. Here we have this again. Also take a look that market has completed the harmonic swing to the upside. It's almost equal legs as in the depth of this retracement, and as from the point of view of the slope of these lines, this almost equals. That led us to think that we in fact could get the 3-drive buy pattern. It's 1618 3-drive. Why it calls it the 1618? Because in this pattern the drives stand at the 1618 extension from each other. So you can see that the second drive stands at 1618 on the first retracement, while third drive should be at 1618 of the second one. And as this retracement also was the 618 from this recent swing, it also gives us this perfect looking A, B, C, top, D pattern that will have the same target as the 3-drive. And take a look, this target stands very close to our expectation on the monthly chart. This is 1050. So that's approximately 1090, that's 1078. So this really will be very close. But that target stands rather far from the daily oversold, and hardly it will be reached on the next week. Most probable that all that we will get on the common week is at best that will be probable reaching of these lows and maybe moving below these lows. It's at maximum. So probably the action to the downside, as example on this one, will take approximately 2, maybe even 3 weeks. So we can see 1, 2, 3, 4, 5, 1 week, 1, 2, 3, 4, 5 second week, and even 2 days more. So probably this journey, if it will have the same pace as here, it probably will take 2, maybe 3 weeks to the downside. On the common, but still on the common week, we have some factor that makes overall situation a bit more complex. If you will carefully take a look at this picture, you will see that market stands very close to the MACD predictor. And we also talked about this on Friday. We said that we have to keep a close eye what will happen here, because appearing of the grabber will be a sophisticated moment. It's not very desirable from the normal bearish development. So that will be the headache for the bears, because when it's always add uncertainty whether this grabber will work or not. If it will work, it will put the significant mass in overall, as you can see, bearish perfect action. Because appearing of the grabber will potentially mean that market could take out of this top. If this will happen, it will erase another pattern that we have on the weekly chart, and that situation becomes really very messy in this case. Of course, this pattern could fail, but why I'm talking about this? Because you can see, but it's not all that market stands very close to the MACD predictor. It stands also close to the oscillator predictor that indicates the level of oversold. And if that would be just the MACD predictor, we could say, well, market could just pass through it and close below. That's no problem. But the market stands very close to the oversold. And this will be really the problem for the market to pass through this area and close below it, because oversold will prevent market for the deep down action and could push market high. And that increases the chances of appearing of the bullish grabber. That's why I'm talking about it. That's why it's a bit worrying factor. It's not very good for overall bearish scenario. Of course, we haven't yet get this pattern, and this pattern haven't been confirmed yet. And maybe it will not appear at all. Maybe market will behave as here. So you can see market stand below the oversold for a long period and significantly below the oversold. Maybe market will show some action here as well. Maybe we will not get any special. But I just would like to warn you about the moments that I see and just discuss with you what the really situations we could get on the common week. Although we stand with our bearish scenario and we think that bearish perspective right now looks more solid rather than bullish moments. In fact, we have just the technical potentials of the bullish patterns, but we do not have patterns itself yet. And maybe we will not get them at all because, for example, if we will get the negative result of the voting in Switzerland, we probably could get the gap down open on Monday as the negative psychological effect from this voting. So this also could happen. But I'm just discussing with you the moments that could appear and what they could mean, why they keeps some menace for overall bearish ideal action. So that's what's about the daily chart. We still think that market probably will reach these areas and will continue to move down in the long-term perspective, but this could lead some unexpected action because this really significant combination of the oversold and MACD predictor. On the intraday charts, on the 4-hour time frame chart, for example, if any bounce up will happen, I think that we will still be focused on the possible short entry, and if retracement up will happen, we should keep an eye on some levels that could let us to take the short position. For example, personally I like this area because this, as you can see, weekly pivot point on the common wick. That's also will be the fib resistance 1180, previous natural support resistance line. So you can see that was previously resistance, breakout, support. Now it's again will be the resistance, and in general 1180s is the level of the previous low. So you can take a look here. Here it is. So previous former lows here, right at the 1180s. Also, as you can see, another bearish moment here is that market has formed the reversal swing because move down is greater than the previous move up, and after that some retracement usually follows. And market will open right at the December monthly pivot point. That will give probably some support to the market, and that's why it makes possible retracement to the upside possible. Since this probably will happen before market will form any grabber on the daily chart, as I hope that this will be before, if we will not get the gap down, as I said. Well, in this case, we probably could think about the taking short, and if market will move right back down to an area of daily oversold and will form the bullish grabber, that will give us some room to think, or maybe to tight stop at the break even to protect our positions if market still will form the bullish grabber. That's our approximate trading plan for the beginning of the week. But many moment will depend on how we will get the open. So how market will open on Monday. If it will be gap down, that will be maybe another story. But if it will open right here around the monthly pivot point, that's the scenario that we probably will try to follow, depending what we really will get in the beginning of the new week, and if this week will start from this retracement up. In this case, we could try to take the short position and then see what will happen around the MACD predictor area.